Well, tech shares in America have entered a bull market. The Nasdaq is up more than 20% since mid-May. The catalyst is lower than expected inflation. Annual inflation eased from 9.1% in June to 8.5% in July, mainly because of cheaper fuel prices. And that was enough for bond yields to fall and for stocks to take off. One person clearly delighted was US President Joe Biden.
Today, we received news that our economy had 0% inflation in the month of July. 0%. But it's far from done in our effort to bring inflation down, but we're moving in the right direction.
Yeah, so let's bring in here Stephen Miller, advisor to GSFM Funds Management and formerly the managing director and head of fixed income at Global Portfolio Manager BlackRock here in Australia. Stephen, thanks for your time. So the markets have taken off. The money market interest rates have come down. It's flagging really that the soft landing that many hope for is really there. Is that a belief that you've got?
It is flagging Goldilocks. It's sort of saying economic activity is holding up okay and the stock market likes that. It's saying inflation's peaked and the bond market likes that. Look, I'm a bond nerd, so I'm a big glass half empty rather than glass half full. Look, the number was much better than I thought, much better than the market thought, but if you delve into the number a little, there's still things you can get worried about. I look at these things, they're called the trim mean. We have the trim mean measures of inflation that the RBA looks at here. The Cleveland Fed in the US calculates something similar. And if I look at that, I'm not seeing any real slowing in momentum in inflation. So that's telling me that inflation's a bit more than selected increases in commodity prices and some temporary supply blockages. And as those unwind, we'll get back to normality. I'm thinking it's going to take a little bit longer. So while inflation has peaked, and that's good news, it's also important how long it takes to get back to normal, below 3.
I was going to ask you about this because doesn't that cause a dilemma for central banks now? Now that this inflation appears to be coming down, they're now sort of, if you like, trying to find the bottom of the pool. They're reaching for the bottom and they're kind of not knowing quite where that is.
Yeah, they are reaching for the bottom of the pool. But if you look at some of the Fed spokespeople out in the wire last night after that number, like me, they're a little unconvinced that this is. I think they acknowledge it's a turning point, but is that trajectory going down far enough and fast enough for them to sort of ease their foot off the brake significantly? And I think the answer we got from various Fed spokespeople last night was no, not really. Markets certainly think they do. The markets sort of think that, the policy rate in the US will peak around 3.5, maybe February, March next year. With inflation where it is now and the market pricing 3% inflation within 2 years' time, that to me implies that the real policy rate, the policy rate adjusted for inflation, struggles to get above 0.
So there's a point, because they've, in the United States, got to get inflation from 8.5 back down to 3.
Yep.
Here in Australia, we've got to get it from 6, potentially 7.5, back down to 2 to 3. And that means that this is not going to slow up the rate of interest rate increases either here in the United States or Europe.
Probably not. We're still going to get rate increases. Now, if you believe what the market's pricing at the moment, the end is in sight. The end is in sight here, the end is in sight. It's a bit further to go here, but in the end is in sight in the US. If you talk to people like me who are a bit more sceptical about this, we think there's a bit more of a journey to go, that we might get another 1.5 or even 1.75 basis points here by the end of the year, and we might get to something like 4 point something in the US compared to the market pricing, something 3.5 and then declining to 3.2 by the end of 2023.
So this is the narrow path that the central banks talk about, including our own Reserve Bank governor. And that is because they want to be certain that the inflation has gone out of the economy, they have to keep pushing these interest rates up to make certain it is going to be gone. And at the same time, the higher they go, the more they risk tipping their overall economy off that cliff.
I think that's true. But the mistake was made last year. The mistake was made when every developed country central bank was slow out of the blocks in recognising how persistent inflation was and how much momentum it had. And from that moment, when they were slow out of the blocks, they've been playing catch-up ever since. So we're always now, we consigned ourselves, the developed world consigned itself to a second-best outcome. And so central banks visited this problem on themselves, charting this course between containing inflation but not tipping the economy into recession. The best we can hope is for some sort of soft landing. So yes, a marked slowdown in growth, perhaps some modest increase in the unemployment rate, and inflation, is slowly vanquished.
OK, so then the final part about this is that, is there a risk that, say, the United States or Europe get it wrong and we ultimately inherit a downturn as a result of their slowdowns?
Yes, certainly. I think the risks of getting it wrong are way bigger in Europe. They've been very, very slow out of the blocks. They've got this sort of conflicted objective where they have to contain borrowing costs because their most indebted economies might go broke, like Italy, but they have to increase borrowing costs because they've got this big inflation problem, right? So Europe's in a bind. The US, you know, fingers crossed, they might sort of get through this without much damage, and I think the same applies to us.
I'll tell you what.
But to answer your question, if they don't get it right, and if the recession is a little more serious than any of us think at the moment, then, you know, being a medium-sized trading economy, you know, we'll get caught in the downdraft.
Tell you what, Stephen Miller, good to have you in the program. We'll do it again shortly from GSFM Funds Management.